Did you know that a single forgotten 800 rupee bill can legally block you from buying your dream home? It sounds like absolute madness, but it happens to thousands of unsuspecting professionals every single day. According to credit bureau data, over 20% of loan rejections stem from minor clerical errors people forgot existed. That invisible three-digit score decides whether you get a VIP interest rate or a crushing penalty. Today, we are following the real-world financial collision course of two peers, Neha and Vikram. Both are 28, work in the same tech industry, and take home an identical salary of 1.5 lakhs a month. Yet, when they apply for the exact same 60 lakh home loan, their futures shatter into two entirely different realities. One walks away celebrating with a sweet 8.2% interest rate. The other gets slapped with a punishing penalty. Hi, I'm Ray, and today we are decoding the brutal math of your CIBIL score so you never make Vikram's mistakes. Hey everyone, welcome back. Today we are talking about the mystery of your CIBIL score. Picture this. You finally land that dream job your parents can actually brag about at weddings. The salary hits consistently every month. No more, beta, can you send 500 rupees calls to your dad? You're scrolling through car listings and 2 BHKs, feeling like the main character of a Bollywood montage. But then reality hits you like a cold bucket of water at 6 a.m. You realize your financial life depends on a mysterious three-digit number you've barely thought about. We are cutting through the boring banking jargon today to break this down simply. Instead of dry lectures, we are following the real-world journeys of two people, Neha and Vikram. They are both 28, work in the same industry, and make the exact same salary, 1.5 lakh rupees a month. They both reach that I'm tired of my landlord's rules stage and want to buy a 60 lakh flat. On paper, they are financial twins. But daily habits are where the divergence begins. Let's look at Neha first. She is the queen of automation. Money comes in and her system routes it seamlessly. She treats her credit card like a debit card. She harvests reward points like a digital squirrel. And her auto debit is always set to pay full balance every single month. Free credit for 30 days. Now contrast that with Vikram. Poor, sweet, misguided Vikram lives the YOLO lifestyle. He works 60 hours a week, so he thinks he deserves those luxury gadgets and fine dining treats. But his credit card management, oh, it's a disaster movie waiting for an Oscar. When the massive bill arrives, he feels a panic pinch. So he pays only the minimum amount due. Why? He wants to keep his cash liquid for weekend plans, assuming paying something is fine. Plus, there's a skeleton in his closet, a minor postpaid phone bill dispute from 3 years ago. It was just 800 rupees. He got frustrated with customer service and threw the SIM card away. Fast forward to today. They are both 28, sitting in a bank applying for that 60 lakh home loan. And the big reveal is absolutely soul crushing for one of them. Neha's file comes back with a pristine CIBIL score of 815, gold medal in finance. Vikram's file, a tragic 645. Even the printer probably sighed in disappointment. For those who don't know, CIBIL ranges from 300 to 900. 645 puts Vikram in subprime high risk. Now let me play devil's advocate. Why does the bank care? Vikram knows he'll pay it back. He's a good guy with a great salary slip. But the bank doesn't know Vikram's heart. To the massive machinery of a major commercial bank, he's just a stranger in a nice shirt. This brings us to a fancy economics term, asymmetric information. Sounds fancy, right? It just means one person in a deal knows way more than the other. Vikram knows his intentions, the bank doesn't. Because they can't look into his soul, they have to rely on data, which is exactly why the CIBIL score was invented. Think of it as reputation as collateral. 100 years ago, you needed gold, land, or a tractor to prove you were good for a loan. Or you lived in a tiny village where everyone knew if you paid your debts. But in a modern megacity like Mumbai or Bangalore, you're one of millions. So we needed a digital ledger. Every bill you pay or miss gets commoditized into that three-digit number. It's objective mathematics. You can fake a nice suit, but you can't fake years of financial habits. It sends a glaring neon signal to the bank. I am low risk or proceed with caution. Now let's go back to Neha and Vikram sitting across from the loan officer. With Neha's 815, she doesn't just get approved, she gets the VIP red carpet treatment. The bank sees her as low risk and offers her a sweet interest rate of 8.2%. And then Vikram walks in. The officer pulls his file and the room atmosphere shifts. That brings us to pillar number one, payment history. The system starts screaming about his history of missed payments and that old phone bill. Now let's look at pillar number two, credit utilization ratio. Sounds intimidating, right? It's just a simple fraction. If your limit is 1 lakh and you spend 80,000, your ratio is 80%. The golden rule everyone agrees on? Keep that ratio below 30%. Why does the bank care? Because constantly maxing out your card signals financial distress. Even if you pay the full balance every month, hitting 90% utilization looks risky. So, how do we hack this? Option 1, ask your bank for a credit limit increase. If your limit triples, that same 80,000 spent suddenly drops your ratio to a safe 26%. Option 2, manipulate the reporting cycle by paying mid-month before the statement drops. Now, pillar number 3, length of credit history. Lenders love predictability. This leads to a massive mistake, closing your oldest credit card because you got a shiny new one. If it doesn't have a massive annual fee, keep it open. You're erasing your own history. Pillar number 4, credit mix. The system rewards maturity and complexity. The big distinction is secured loans versus unsecured loans. If your profile is just 5 maxed out cards, the algorithm gets nervous. And finally, pillar number 5, new inquiries. This is super sensitive. Every time you formally apply for a loan, it triggers a hard inquiry. Apply for 3 credit cards in a week, and the system assumes you're in a financial panic. You have to be strategic. Only apply when you actually need credit. But wait, let's bust a huge Gen Z myth. Checking your own CIBIL score does not hurt you. Soft inquiries are completely invisible to lenders. So go check your score guilt-free. Let's look at the wealth gap this creates for our financial twins over 10 years. Neha invested the 9,000 rupees a month she saved on her lower home loan interest rate. After 10 years of consistent investing at a 12% return, Neha accumulated over 22 lakhs. At age 38, she makes a bullet payment, clears her loan early, and is completely debt-free. But Vikram at age 38, he is effectively drowning in high interest and high debt obligations. He hits the dreaded FOIR wall, fixed obligations to income ratio. Banks have a strict rule. If more than half your paycheck goes to debt, you're maxed out. Vikram's home loan EMI eats up most of his salary, leaving him financially suffocated. When his old car breaks down and he needs a new loan, the bank rejects him instantly. So he resorts to private lenders charging an insane 18% interest rate. It's a complete death spiral. His monthly outgoings swallow his entire life. Okay, I know this is heavy. Let's pivot to 3 simple, actionable hacks. Hack number 1, the rent and utility hack. New fintech apps let you report rent payments. 6 months of consistent rent reporting builds a solid credit foundation from scratch. Hack number 2, use the Ramit Sethi script if you ever miss a payment fee. Call the bank, explain it was an honest mistake, and ask for a waiver and clean report. Hack number 3, do your yearly CIBIL checkup. It's your legal right under RBI. You are hunting for clerical errors or identity theft anomalies before they hurt you. If you spot an error, file a dispute. The Bureau has 30 days by law to fix it. We have covered an immense amount of ground today. Let's wrap this up. Your CIBIL score isn't just a number, it's the difference between wealth and financial stress. Will future algorithms track your late night food deliveries or Uber rides? Who knows? But for now, go check your score today. Don't be a Vikram, be a Neha. I'm Ray, and this has been a ZrrRing deep dive. Stay smart, stay debt savvy. Before you run off to check your own numbers, hit that follow button and drop a comment below. Tell me your wildest credit card horror story, or share this with that one friend who needs a reality check. Stay smart, keep your ledger clean, and I'll catch you in the next deep dive.